Hey everybody, Manny Talabear here. We're now on day 26, and on day 26, we're going to talk for a few minutes about getting money to scale your business. And what I'm talking about is going out there and getting outside money to fund the ads that will get this thing off the ground. And I just want to give you some insights on what to think about when you're going out there looking for money. So the first thing that I would do, um, I think in my opinion, if you're fairly new to the game, you need everything completely built, like completely built. It's all done. You have your course, you have your ads set up, you have your funnel created, you have your lead generation, you have the product in Kajabi. You basically have everything sitting there. The only thing you're waiting for is money to run ads. What you don't want to do is you don't want to go to people with a concept or this is my idea and I want you to fund my idea. You want to go to someone and say, this is what we have, this is what we're selling, this is why I think it's going to work. And you want to go to someone with everything built out. So what you're wanting to sell is a setup and not a startup. And then the next thing you need to think about is what you're going to be willing to give up in order to get the money to scale this thing. And so what I want you to think about is, what is your current financial situation? Do you have no money in the bank? Are you 20,000 in debt? Do you have 500 in the bank, 1,000 in the bank? What you need to think about is, what would it be worth for you to have 250,000 in the bank? And what would you be willing to give up on the front end to be able to have two or $300,000 in the bank? And that's what you want to think about. And so you might be willing to give up 100% profit. So if someone invests 15,000, you'll give them back 30, and you might get that 15,000 from one person, or you might get it from 10 people. But how you're going to do it is you're basically going to be willing to let them double their money. Now, in addition to having the thing set up where you can show the person a living, breathing thing that's completely built and you've done your homework and you can talk about it articulately, I think, and also talk about the money. Another thing that you want to think about is that when you go to this money, go asking for this money, what you need to think about is how much of this money that you're putting into ads is going to be at risk. In many of your cases, the number is going to be 100%. And so if you're asking someone to invest in traffic to scale this thing, and you're telling them the money's 100% at risk, if this doesn't work, you're going to lose all of your money, you're going to need to give them some compensation. And like I said, 100% return on their investment in 6 months or a year is a very, very good return. What you don't want to ever do is you don't want to do open-ended agreements, and you also don't want to offer equity or a piece of the business ongoing. You don't want to do that. What you're simply trying to do is get enough money to go from point A to point B and get the thing off the ground. And when you offer the money, when you ask for the money, you might do first in, first out. What first in, first out means is, if you invest, if you're the first investor, you're going to be the first person paid back once this thing starts showing a return. And so if you borrow 15,000 and you borrow it from a number of different people, let's say the first month you bring in 45,000. Well, you're going to take 15,000 off the table, and you're going to pay those people back their principal. You're not going to give them profit yet. But what they're going to do is they're going to get all of their money back, and now they're going to wait for a period of time until the thing is really scaled for you to give them the interest or the amount of money that you agree to. And what you want to think about, first in, first out. So if you get 10 people, it's going to be person one, person two, person three, and they're going to be paid back that way. Another thing that you do want to think about, in some cases, you are better off not giving the money back for at least 120 days. So if we invest 15,000 and we make bring in 45,000, the next month you're way better off investing the 45,000. And if you invest 45,000 and bring in 135,000 the next month, the next month you want to invest the whole 135,000 ads, and you want to continue to scale to get that thing off the ground. And so you might not necessarily give them the money back the minute it comes in, but what you do want to think about is how you're going to handle that part of it. And then the next thing you want to think about is how much of their money is at risk. So is their money 100% at risk? Is it 75% at risk? Is it 50% at risk? Is it 25% at risk? And you got to kind of get a grasp around that and be able to articulate that. So if it's your first product, you're going to these people and saying, look, the money's 100% at risk. If you lose your money, you're going to lose 100%. And you're going to give them a lot of compensation for that. And you're probably asking yourself, well, how would the money not be at 100% at risk? And the reason the money might not be at 100% risk is because you have a metric ton of other stuff to sell these people. So we're going to spend $15,000 on ads. So the first thing you want to think about is this. I'm going to spend $15,000 on ads, but I'm not going to blindly just throw money into ads and not tweak the ads. The ads are going to work. And if they don't work, we're going to turn the traffic down and we're going to readjust. So we're going to spend 500, then we're going to spend 1,000, and then we're going to spend 1,500, and we're going to continue to up our ad spend once the ads are working, not before. So we're not just going to blindly throw the money in and lose it. The other thing, though, is if you figure it costs $10 per lead and you spend 15,000, if I get 1,500 leads, I have 80 other products I can sell them. I can sell them coaching. I can sell them master classes. And so if we blew the whole 15 grand, we're going to get some money back from those leads. So the money's not all at risk. And so that's what you want to think about. And like I said, if the money's more at risk, you're going to give them a better return. If the money's less at risk, you're going to give them less of a return. But don't ever offer to give them a long-term percentage or a piece of like 5 or 10% of the business. I would never do that. And like I said, the key to all of this is being able to go to people articulately, show them exactly what you have, show them that it's ready to go, and then show them how they're going to get the money back if the thing doesn't work. So like I said, if the thing doesn't work, are you willing to pay the money back? Again, is the money 100% at risk, or are you willing to give this money back through some other method if it doesn't work? And again, if you're willing to pay the money back out of your own pocket through revenue you get from work or something, again, you can negotiate that to get a better deal for yourself. But we're going to end out, and like I said, I know we will cover this a lot more, especially as we get closer to being caught up and we get closer to launching my thing. We'll talk about that a lot more, but I'm going to end out and I'll see you on the next video, and thanks a lot.